Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, December the 30th, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart, we have high-level overview. Wave 1 is done. We're working on a correction down in this wave 2 correction area, and we're expecting this to come down further. So the last several months we've been discussing how this, well, go back about 6 months or so ago when we made this new swing point low, we talked about how that was not likely they're going to be the low yet. And even though we got a bounce, we expected a lower high than a lower low. And we got that, not by a lot, but yeah, a little something, something down. And then this latest bounce up, we talked about that as well, that this was looking very overlapping, chopping type of price action that was not conducive to a reversal and a breakout, but more in tune to breaking back down and making yet another wave 2 down. So remember, this little guy here is movable. I do expect to make a new low. The question is, are we going to get all the way down to 80, like we've been calling for over 3+ years? Or do we make it somewhere between where we are in the mid-90s to maybe the lower 90s? Maybe we don't get all the way down to the 80s or maybe the upper 80s. But we shall see. But the plan, Ian, James, Mr. Tucson, others, is that this wave 2 will end. I just don't think it's over. I think we're going to go lower, and I think it will definitely move lower. The question is, how much lower before it finally ends and we eventually go breaking out? Because that is the plan. Eventually, the dollar should start strengthening, and we go breaking some new highs above that 114.72. Fair enough? So let's jump into the charting platform, and we can see what we were discussing. Here's that swing point low. And from that low, we had all this overlapping action. We went up, we pulled back, we went up, we overlapped. We went up, we pulled back, we overlapped. Constantly overlapping. Yet again, we went up, we pulled back, basically a double top, and then we started to break down. We talked about this as we used the swing point low to high. We broke the 618, which is roughly around the Magic Fibo. We went down to the extensions. Then what? Well, then we started to slide this down to the next level. And from that high, this low over here to that high, we broke the 618, went down to the extensions. And now we're using this swing point low. And look at our extensions. 97.68, 97.38, and we just missed it. So this little bounce again is like the previous one and the one before that. We're not expecting this to go breaking out. We're expecting these lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Why is this significant as we broke below? We talked about this 98.50 area, kind of a major battle zone. If you go back in time, you'll see it was a major battle zone, form a resistance, turn support, turn resistance, turn support. And most recently, as we broke below it, we said that was the early sign we were likely going to make new swing point lows, because from this swing point low up to that high, the official 618 sits around that 97.80. See it? So we're not quite there yet. We basically dipped towards it, tested it, and bounced off of it. So we haven't officially closed below this via a candle body, but we talked about that level at 98.50 being important because once we broke it, the writing was on the wall. And so far, we came down here. We just haven't closed below that 98 or 97.80 yet. And this 97.60, which we will eventually reach, highest probability, 75 plus percent, that we're going to go toward this 97.60, 70 plus percent, we're going to go toward this 97.38. And why is that important? Because once we reach these and we get a candle body to close below this area, then we have high probability to shift down 70 plus percent. 75% we're going to be shooting for 95.60. 70 plus we're going to go toward 95.11. And why is that significant? Because both of those are below the swing point low. Amen? So any rallies should be sold in the near future. What does that mean? Days, weeks, months? We could drag this on into, obviously we have 2 more trading days, today and tomorrow. Then we start the new year. So this obviously could drag into and will drag into 2026. But is it the first few days, first few months, first couple of quarters? We shall see. But the plan is any rally should be sold. We've been talking about this on the dollar over 3 years ago. You can take this out to a monthly view, and we can see we've been discussing that forever and ever, amen, that we were likely going to see that type of move. And we did get a big push. We got a retracement. We talked about even way back then. Any rally should be sold because we're expecting this breakdown to continue. And that's exactly what we're seeing. Got it? So how much lower do we go? Do we get the official, and you got to even condense this even further, do we get this 618, 786 type of retracement off of the swing point low, which occurred back in 2000, into 2007, early 2008? Is that when that officially happens? And do we get to the 618 level, which is roughly 87? Do we push more toward the 786, which is 80? That's kind of what we were thinking down here initially. So far so good. Still think we're going lower. The question is, do we get to the mid 80s, to the lower 80s, or do we make a lower low somewhere in the lower 90s? The plan is definitely to make a new swing point low below that 96 area, pushing us down toward 95. So that's where we are. Go back to the daily, and I'll expand that out, zoom this in a little bit so you can see this more likely. So why are we bringing this up? I don't think this bottom reversal at this juncture is ready to go breaking out. I just think it's part of a retracement. Stair-steppingly, this is the way it always moves. Price always moves in a stair step. It never goes straight down or it never goes straight up. You always get these pullbacks, ebb and flow, as some people like to call it. And the highest probability of short-term targets are back toward this 97.68, 97.38. And you can see from that swing point low, we got to 97.74. Within about 5-6 pips from this area. That's pretty close. Well, I still think we're going lower. And because we broke below this 98.50, that kind of set the tone. And what did we do when we came down here? We bounced up, tested that area, that kind of battle zone area in here, failed, went on to make a new low. Now we're bouncing again. And I still think more than likely, if we can break out the previous high of this 98.70, 98.80 area, this prior swing point, then we may even go test the Magic Fibo. The Fibo is actually starting to turn back down, which after this initial move and this little rally up, it flattened out a little bit. But since this latest push lower, we're starting to turn a little bit. So, Mr. Tucson, I say, do we definitely going to go up here first? It's possible, but we got to take out the swing point here, which was former support, turn resistance, right around that 98.50 area. That's why when we broke below clearly for days, that this was a very important area that we needed to break. So in closing on the dollar index, be careful. All we're doing is getting a little reversal on this, but I do think it's going to end in a lower high, lower low. And as you go to the software and check that out, we can see why we're getting a little bit of a bounce. The daily's back oversold. So what happened the last time? We simply started to depressurize. We slingshotted to a new low, and we're starting to depressurize. And we kind of talked about this weeks and months ago from that prior swing point low. While we had all this overlapping, chopping price action, this definitely looks corrective. Corrective of what? The down move. So this is why I don't think that wave two ended here and we're ready to go breaking out. I think it's inevitably we're going to make lower highs, lower lows. And we talked about this where it would be required the daily would cycle down and start slingshotting lower and lower and lower and lower in order for us to get to a new swing point low. Fair enough? All righty. So why is that important? Because as we start moving from the dollar, why do we always spend so much time on it? Because you know where the dollar's headed, you know where a lot of asset classes are headed. Not last but not least would be the currency pairs like the euro dollar. Take a quick look at the euro. The euro, we've been bouncing and grinding higher. We're in a position of authority. I'll show you that on the chart in a moment. But we reached those extensions we talked about. We talked about this back in November where we came down and bounced. We were looking to take this long. We ended up getting pipped out where we made 100 and something pips of profit. Then we got pipped out. And then I said, get right back in. Right? The software is going to engage, disengage. The daily is going to go up in cycle. Then it's going to turn over and start slingshotting higher and higher. So we talked about that initially. We started focusing on 116.79, 117 area. We reached those targets. Then we went on to say the next target's up. We're going to be this 117.60, 117, basically 118. And as you can see, we reached both of those targets. So what's next? Rinse and repeat. You go from the bigger swing point, which is up here at that 119.18. And from that high to this low, which was down here in November, we did retrace, reaching targets after targets. And look, we're above the 618. So Mr. Tucson, that green body candle, even though we're pulling back a little bit now and retesting it, that's fine. It's part of that stair-step process that now that this green candle closed here, we have a 75% chance we're going to visit 119.82. So that's a good 230-ish pips from now. To get up to 119, we're at 117. Got it? And then after that, it's 120.37. Isn't that pretty cool? So this is why I keep saying, keep buying the dips, get to a position of authority, and let the trade run. So what did we do here? We used the software to do the work. We came down, like I said here, we got in on the trigger, we made some pips. You can see we took some profits along the way, and then we got a little pullback, pipped us out. Then what did we say? Get right back in because we were back oversold. And we entered again, and we're up 182 pips and counting in a position of authority. I haven't even taken officially my take profit one because I know high probability we go and visit that 120 area. So that's where I'm going to look to officially take profit one. But we're in a position of authority. We're at break even plus one. So there's nothing can go wrong with this. Even if it goes plummeting lower, it'll stop us out for profit. And this is part of what we discussed. We were going to cycle up, we engaged, disengaged, and then we went on to slingshot higher and higher, just grinding higher and higher. So what's next? Once we finally take out the prior swing point, That gives us that high to low on the charting platform I showed you on TradingView. And that gives us that 119, 120 targets up there. And we're going to continue to let this run. Fair enough? And that should be turned on. I had to, again, for those of you keeping score, my big desktop computer's in the shop, so it's getting repaired and diagnostics run, and hopefully all that'll turn out fine. We're in the process of getting it back up and running. Until then, I'm working from my desktop, now from a laptop. So we're going to have a little limited amount of things running because I don't have the big workspace like I normally do. But hey, we're going to get the job done. I told you if I had trouble sending signals, I'd send smoke signals just to get you the message and the information. So it will continue. And reminder of housekeeping, we have today's class, and then we have off the rest for the New Year's Eve, and a big happy new year going into 2026. And then we're scheduled to return the following week on the normal Tuesday, Wednesday, Thursday schedule. So what else did we do? The pound dollar. Pound dollar, we're up over 200 plus pips. We are getting a little bit of a pullback. The daily's been slingshotting higher, that little bit of a pullback. That's expected. So I'm looking for buy the dip, continuation. Again, we're in a position of authority. We continue to get in, make 100 pips or so, get pipped out, get back in, make hundreds of pips, be in a position of authority, look for this to make a higher low, higher high as we continue to grind. And what are those targets? We do the same thing we did with the euro, we do with the pound dollar, and that was we're going to reach toward that 135.84. We touched on this. Now we're pulling back. The bias is we'll probably pull back a little further as the dollar bounces a little bit. Then as it turns over to head lower, this will bounce and go higher. But we're in the process of moving up toward these targets, and we just about reached them. We got a little bit more to go. What happens after that target is reached? You swing this out a little further, and you go from that prior high to this swing point low. We have that 618 level right there, which was basically that 139, say 135. We closed above it right there, that green candle right there. We closed above. So what does that tell us? We have a 75% chance. Ian, James, Mr. Tucson, Alan, Eric, Harold, we're going, Emil, up here to 139, 75%. Is that a guarantee? No, 75%, 75%. There's still 25% that could do something else. But the bias is high probability, we're going to go to 39. 70+% chance, we're going to go to basically 140. That's where I expect this stair step to continue. And along the run up, you get corrective action and you continue higher. And this is why we believe we're going to continue to go up hundreds of more pips. Or to get to 139, we're talking 450 pips to get up there. And we're already up a few hundred pips. Took some profit there, got pipped out, got back in as we discussed. So I expect more upside. A lot more upside. Let's see how far the dollar continues to decline. The more it does so, the more the euro and the pound are going to continue to go higher. Fair enough? Euro yen, it's getting at extreme levels. We've been discussing this, that we're looking for a big short position on this because the monthly's overbought, the weekly's overbought, the daily's overbought, and it's getting exhausted. It's been on quite the run, and it's time to get a little pullback. Is it a deep pullback? Is it a trend reversal? Well, just remember the yen scenario. Yen tends to strengthen when our markets are at risk. So if we're going to get the Elizabeth, I'm coming to join you, honey, or just some sort of big correction coming into 2026, which is setting up that way, maybe it's pushed out to 27. As timing is the key, but this is likely going to give us a pullback. And we're looking to set that up. Why is that? You can go to the software and check that out. It is screaming we're extremely overbought after quite the run of this product, currency pair. And here's the euro yen monthly. We've been just slingshotting higher and higher and higher. It's getting exhausted. So we need a pullback. Now in these monthly charts, it doesn't look like a lot of, as far as pips on that pullback, but you can kind of get a look at this. Use your crosshair over here. Use the crosshair. And we were up here at 175 and we pulled back down to 155. That was 2,000 pip move. During that corrective action, 2,000 pips. So what do you think's coming? Another correction. Even if we just pull back to where we came from, that's almost 1,000 pips just to test that prior swing point for that pullback to break out. And we're likely going to see it probably retest that at least. We don't hold that. Then it opens the door to these prior lows at 155, which could be upwards of 2,000, 3,000 pips. If we break down now, we don't hold this prior area, and we start breaking back toward this swing point, the cloud area, you're talking 3,000 pips. So, Mr. Tucson, why am I interested in getting a short position? I'm looking for this to be a longer term trade, not a scalp, not a day trade, not a short term trade. The monthly is extremely overbought. Yes, it's still up. Could this thing climb a little higher? Sure. That's why I'm waiting for the monthly to start to turn and hook. And when it does, like the last time, we get a PAI hook. I want to go short and stay short till we probably get upwards of 1,500, 2,000, maybe 3,000 pips. We shall see, or more. If the markets start correcting, risk on, risk off, what happened during that period? Right? What happened during that period? The market started to pull back a bit. We got a correction and risk on, risk off. When the markets are struggling and we get a pullback, which is expected to occur sometime in 2026, it might be first quarter, mid of the year. We'll see how that plays out. Maybe it starts off in the beginning of the year and we get a nice little pullback into the beginning of the year. But risk on, risk off, when the markets are struggling, the yen tends to strengthen. So that's why I'm watching this. Plus, we got the picture here showing a monthly overbought. We have a weekly overbought. So I'm just going down a level. Weekly overbought at extreme, starting to show signs of a trigger lower. So in some of my accounts, I'm already short this in a position of authority, waiting for this thing either to break down further or rally back up, pip me out for some profits, and I'll look to go short again. But I was waiting to see on this one trading platform for the monthly to give us that trigger lower. So what do you do in that case? You can go into your expert advisor, properties, and you go under your inputs, and you tell this, your 5.0 software. You're going to set up your stop loss, take profits. This is a very volatile beast. So you want to have big take profits and stop loss levels. And I'm looking to make thousands of pips on this. So put 2,000 in here, take profit 3, somewhere around 3,000. So I'm just going to place this in here, 3,000. And probably my first take profit will be 1,000. And then you continue to scroll down. And what are we looking to do? We want to trigger long. No, I don't want to trigger long. I want to use trade trigger short. That would be a big yes. And say true. And then you continue down. Do I want to slingshot long? No. I'm going to make that false. Do I want to slingshot short? No. I want simply get a trigger. All I want for Christmas, and what you just passed, it is right there. I want a trigger short, like we see on the weekly chart. So we say, okay, now I'm going to move it back to the monthly. Over here, time frames, go back to the monthly. And I'm going to wait to get that trigger short on the monthly. And all I got to do is click ready to trade mode. It'll sit in this ready to trade mode for a day, a week, a month, 6 months, whatever it takes for this thing to start to turn over. You get your little triggers and you're good to go. Fair enough? All righty. So what else? You continue the process. What about the pound yen? Pound yen's doing the same thing. It's extremely overbought. It's in some nosebleed section. We have a monthly overbought, a weekly overbought, a daily overbought, and we're looking for the same type of move lower as we expect this to take place over the next several weeks and months. As the market's correct, we're going to expect risk on, risk off. So what happened back here? Prior to this, from 2020, right around COVID, I made a bold statement. I don't make predictions. I'll leave that to the prophets. But I made a bold statement, and I said way back then, see if I can, I have to probably go to a weekly to show this to you, but way back then, I talked about this low, and I said this is a great opportunity based on a monthly oversold, a weekly oversold, a daily oversold, the technical picture. We're due to go up thousands and thousands of pips, somewhere around about an 8,000 plus run, to go back and revisit the high and make new highs. And back then in the archives said the same thing, that we're going to go and make a huge run, 8 to 10,000 pip run, and it's going to take years to get there, but that was the plan, to go back and visit those highs and make new highs. We did exactly that. Then what happened? Coming into more current times, we reached the big down move, and I'm going to zoom that in for you, where this baby dropped 20, I believe it was like 2,700 pips right there from the high down to the low. That was the big unwinding of the carry trade. That's the way they explained it. Well, it was the technical picture. Again, we had a monthly overbought, a weekly overbought, a daily overbought. We were expecting this. Well, why is this important? Well, Mr. Tucson and others, Harold, we had a very impulsive move down after all this climb higher. This looks unfinished. So even as this corrected, this does not look the bullish overlapping price action here to go breaking out and continue this trend indefinitely up. No, this looks not complete, and we need another push lower. This looks like the A wave, and I don't have on my laptop, my little handy dandy cursor tool. I'm gonna see about installing it and potentially getting it, but like I said, the desktop's in the shop, so it should be back hopefully by the next year when we start the new classes into the new year. But today, this is the A, so I'll do it with my little finger right there. That's the A. And all this chopping, overlapping price is the B wave. And this is an expanded flat, in my humble opinion, because we did break to a new high. And that sets the B up here. Is it over? Could it go a little higher? Sure, it could go a little higher. Possible. But I do think we're getting close to a topping scenario, and we're going to get another push lower. Well, imagine, Harold, even if we just get this the A, this is the B, and we come down into the area of this A wave, that's going to put us somewhere around that 180, maybe 185, and we're at 210. That's over 2,000 plus pips again. So you can see why I'm interested in selling this rally and getting established. Over here, we thought maybe we were going to end here and we'd start pushing lower. Doesn't look like much. We made a few hundred pips. We got pipped out, got back in, made a few hundred pips, got pipped out. And I'm looking to continue to do the same. Every time we get a pullback, get you position of authority. You get pipped out again, keep going. Put your battle armor on. Nobody said, well, as soon as I go short, it has to work out this way every time. Well, I want to go short, Harold, and the next minute I want to be down, up 2,700 pips. Well, we talked about going up 8,000+ pips. We got that. And then we talked about taking profits. And sure enough, we got a correction. But what's setting up the same here, causing that, is we're doing now. It's exactly the same. Come back over to the software. We're in that ready to trade mode on the euro yen. We'll check out the pound yen. We got a weekly extremely overbought. We got our monthly, so go over here, time frames, monthly overbought. And I'm looking for a trigger lower on this one too. Just like the last time, Those 2,700 pips right there, thing of beauty. So I'm looking for that same setup. So what do? You go into your expert advisor. You set this to all I want to trigger short on the monthly chart. See right there, monthly chart, and look to establish that position. Well, like I said, here, when it turned over the last time, we made some nice pips. We got pipped out, and then we did the same. Looking to do it again. Over here, and yet again. So anytime I see the software at extremes, along with the technical picture, that this baby is at extremes, monthly, weekly, daily, I don't typically make a big position to go long in those environments. I wait for the PAI to hook, and we get our hook and cross phenomenon, which is what? Well, if we get a monthly to hook and cross, then it means the weekly is going to cycle down, and it gives us about 2 to 5 months. A weekly takes about 2 to 5 months to cycle. A monthly takes about 2 to 5 years to cycle down. So are we going to get a monthly cycle down? If we get the Elizabeth, I'm coming to join you, honey, I definitely expect to get a monthly cycle down, like last time. And feast your eyes on what that did during that monthly cycle down. We're up here at 194. We went all the way down to 124. 7,000 pips. Wow. I kind of like that. Am I trying to tell you right now, Mr. Tucson and others, Ian, are we going to get a 7,000 plus pip move? If we get the Elizabeth, I'm coming to join you, honey, and we get that process, then sure, monthly cycle down, we could make 7,000, could be 10,000. And what do we know about this in advance? This is why I like this charting platform. You go back to this weekly chart, or even the monthly chart, even better, bring this into perspective, and what is the pound yen historically done during market phenomenons, market crashes? Well, we had a big run up, huge run up into what? 1999 going into 2000. And what happened? Dot-com bubble burst, financial crisis, went down over 9,000 pips. We started grinding higher and higher into 2007. And what happened to that? Real estate bubble burst, and we went down over 13,000 pips. So what's going to happen next? What if we do get the Elizabeth, I'm coming to join you, honey? What I've been talking about forever. Is it going to happen? Do we get just a correction? It doesn't matter if we get the true financial bubble burst, is commercial real estate, $5 trillion sitting in commercial real estate that can burst like the last one over here. This time it could be commercial real estate. It could be a fiat currency that fails. It could be World War III, Iran's threatening World War III, et cetera, blah, blah, blah. It doesn't matter what the circumstance is. If we get a big market downtick, 38 trillion in debt, 1.23 trillion in credit card debt. We're like drunken sailors. They're spending money and people don't have it. Unfortunately, all this credit card debt, a lot of people are just buying goods and services they need to live on. Healthcare, 20% of those expenses is on healthcare. I digress, but it's coming. I feel it. Elizabeth, I'm coming to join you, honey. Here comes the big one. Is it 2026? Maybe. But all I know is when we get a financial crisis of any type and the markets sell off, this typically makes a big run down. And the latest move we showed you here, we're talking a couple of thousand pips or so just to get that corrective action, even if it's just corrective for further upside. And if you tie in the fact that we might get another financial crisis, then this thing could go plummeting tens of thousands of pips. Amen? Again, we've had this story, I've been over and over, but this is the easy way to do it. You get in the software, you set it up like we did the Euro Yen a second ago, and you get in that ready to trade mode, and this baby will sit ready to trade until you're ready to go. And then we'll get in that position and look to make not only hundreds of pips, get to a position of authority, but thousands of pips, which could turn into multiple thousands, up to 10,000 or so, if we get that financial crisis along the way. All righty, let's continue. What's next is let's go to the markets and check out what ES is doing. We talked about this going in the last week with the Christmas break, and we had limited trading and low liquidity with everybody taking the holidays off. I said we're probably going to see this low liquidity grind higher, and we type that in to our schedule over here, and that's what we talked about last week. Markets in a low liquidity grind higher. That I more or less expect is that the Santa Claus rally. They typically tend to grind higher in low liquidity situations, where that's what we're in now. A lot of people taking holidays, banks, etc. All the big traders, the hedge funds, the pension plans, they're taking money out of the market, resetting up how they're going to distribute it into 2026. So this is a typical time as they start moving some liquidity around. You get the low liquidity, which the markets tend to want to grind higher. So what does that mean? The technical picture on this is we already reached from the recent high to low. We closed above the 618. Where we're going to go, that's 69.50, 69.70 area. What did we do? We did exactly that. Now we're pulling back. So from the recent swing point low, we can continue to rinse and repeat using our Fibonacci tool. So you use a 2-point tool here, and you look from that swing point low up to the current swing point high, which is about right there. We want to look for this 68, 68.90, 68.80 area. Should be a good area for us to hold. If we continue to hold that area, then we could potentially start pushing toward our 7,000 target. Are we going to get there as we go into the very early next year? Or is this the beginning of a topping out where we get a correction before we then get that blow off top, maybe first quarter? So I'm not saying that this is the end of the move, but we did make a new swing point high. That's one thing to keep in mind, knowing that we do have a new swing point high on that. This is the futures market. What about the cash index? SPX, that's the cash index, S&P 500. It too went on to make a new high slightly, and it's starting to pull back. So what's some key levels to watch? Just the technical picture. It's extremely important we watch that prior swing point down here, about 67.20. As long as that holds, this is an area to watch. You use your 2.2, go from the swing point low up to the swing point high, and watch this 6,800 level. We hold 6,800, then we could potentially push toward that 7,000, 69.90 area. So we can use a 3-point tool to see, well, what if this is the low, this is the high, we make a higher low, where would those extensions be? Well, many ways to slice this. Mr. Tucson, from that high to this low, we see we reach those extensions. So it's no surprise that when we made this move, we grinded higher, we reached those targets, 69.20, 69.47 area, and now we reversed off of that. Or are we just retesting the prior breakout, where we reached that high, pulled back, broke out, went to the extension, retesting? If this holds, then we could potentially go to that 7,000 level. Is that the plan? Or are we going to break down further? Well, the key point is if we start closing below, say, 68.50 area, which is at 618 level, 68.50, we start closing below that, then it kind of sets the tone. We're going to go towards 66.90, 66.60 area. So we're going to get the pullback early, going into the new year, get a pullback. Well, if we don't start holding this area, it means we're likely going to get a new swing point low. And guess who's looming down below? the daily Magic Fibo. So this could be setting up a much bigger correction. And what happens if we don't reach, we don't hold this swing point low? First things first, we break that 68.50 area, kind of sets the tone. We're going to go lower toward the 66.90, 67, 66.90, maybe this 66.60 area. And then this Magic Fibo's down here. So it could be that we're looking to get a little retracement to the Magic Fibo to bounce off of that. And what happens if we come down here and don't hold? Then you could do the 3-day. 3 days much further down. It's in the 59 to 58 area down in here. And what if we get a big pullback in the year? We don't hold that level. Well, wasn't long ago, we did a test of the weekly Magic Fibo in April. The tariff talk, tariff talk. That brought us down to the weekly Magic Fibo. Could potentially going into 2026 bring a visit to the weekly Magic Fibo. Well, what if it starts off and we get the Elizabeth, I'm coming to join you, honey? We'll probably break below the weekly and go visit the monthly, which is way down here in 3,800 to 3,500 range. So this is what we're talking about. Do we get the big Elizabeth, I'm coming to join you, honey? If that is the case, then we're expecting this to come down toward the monthly Magic Fibo and even lower. Wow. From potentially 7,000, cut it in half. Yeah, maybe even deeper than that. So we shall see how that plays out. But let's go to a smaller time frame right now. We need to watch some very critical levels. And if we can muster and hang on to a higher low, we have the potential of one last push toward that 69 and change. This looks like the beginning of a 1, 2, 3, 4, 5. So we could potentially get that last little push. Is this going to be more of that low liquidity grind higher into the new year until everybody's back up and running sometime in the first or second week of January? Or if we don't start holding here, breaking down further from that low up to the current high, that's that 6,800 we talked about. So Mr. Tucson, if we start breaking below 6,800, 6,850 area, then it kind of sets the tone. We need it. Whoops, I didn't want to move that. I love how this thing has its own mind. When I want to move it, it doesn't move. And when I don't want to move it, I'm going to have to come back over here and grab it and reattach it. But there's that swing point low to the swing point high. So there you have it. If we don't hold this level and we start breaking down below 6,800, it kind of sets the tone. We're making a new swing point low. Amen? So do we get this correction coming in? Or do we hold this level to finish that little 7,000 zone? Keep an eye on that. First things first, zoom this in, get the bigger picture going for the short term, and say, what is price action doing right now? We start taking out 69 and change, then it opens the door to go visit the prior high up here at 69.30 for short term. We get above that, then potentially we have the swing point up here at 69.50 basically where we touched. And then what? Onward and upwards toward potentially that 7,000 up here. So watch this carefully. We break below 6,800. I expect, in my humble opinion, we're going to break down further somewhere in the neighborhood of a couple hundred points. From 68 down about 66. So 100, 120 to 150 points, somewhere like that, maybe 200. That's a critical point. So what are we looking for? This zone right here, basically that 6,800 down to about 6760 area, 6770. Got it? So this zone right there, we need to look to hold. So I want to go into settings and turn that into green for some support. I'll make it a light green so it's not too obtrusive, but we're looking for this zone to hold. So this is a critical zone that if we close below this level, all roads lead to what? A good 100 to 150-ish type of point move lower. If not, we start holding this, we break the high, then we're talking a good 50 points or so to the upside, shooting for that 7,000, maybe 7,010. So in closing, do we get the low grind, low liquidity grind, higher continuation? Maybe we finish today, tomorrow, Friday, going into next year and get that grind higher? Or do we start off with a correction? And the reason I'm saying could be or, because the NASDAQ doesn't look as bullish as this, right? This looks like a 1, 2, 3, 4. And as long as we hold above that area, then this still looks bullish for one more pop run higher on the NASDAQ, excuse me, on the S&P. But there is cautionary tales because, yes, I do think we're going to get a blow off top eventually, but we might need that much bigger correction. Throw in the NASDAQ. Got it right next door. Throw in the NASDAQ. It is not looking quite as bullish. It kind of topped out at the same level, and this looks like it wants to roll back over. It looks like it wants to come visit this Magic Fibo down here. So it's possible this thing could just turn and burn and go up toward the extensions. But more than likely, looking at this scenario, this looks a little bit more overlapping and chopping. We may need one more push. So is this high to low the A wave, this corrective B wave, and we need one more push lower C, then we get the blow off top? So this one is not quite as bullish. So please keep an eye on that. So what do you do in these examples? Bigger picture, you stretch this out, you bring this down where we can look at this, and you use your 2-point tool. From the prior swing point low up to the swing point high, we need this zone to hold, which after this latest price action, I'm going to move this down. Here's my 618,786 zone from that low to that prior high, which is right here, and move this down this way. There's that 618,786 zone from what? This swing point low up to that swing point high. There's my 618 right around that 25,270 down to 25,1 area. So what if the NASDAQ rolls over and we don't hold that 618,786 support zone? So again, I need to go into settings, change this to a light green, just to say that this is the potential zone to hold. And we start closing below that, then the door is ajar to not only a new swing point low, which would put us down to 24.7, 24.6 area. I think it's going to intersect with the Magic Fibo. So do we need a Magic Fibo daily retracement to bounce? If that doesn't hold, then the same thing we just looked at on the S&P, you go to the 3-day, it's way down here at 21.6 to 21.1 area, right there, Magic Fibo. So that's what these circles are. There's my 3-day, a 3-day here. This is the daily. And what if that doesn't hold? Then we have onward and downward we go. Here's the weekly down here. So I need to move this guy that way. Bring this over this way. Bring this that way. Stretch this out a little bit more. So do we come and visit a weekly like we did over here for the tariff talk? Tariffs, tariffs, terrible. The terrible tariffs. Nice big run. We do need a correction. So do we get it now? Do we pop off first, then we get it? So it's coming. Is it early 2026? What did we talk about many times? Back in SPX, I showed you many times looking at SPX, going back into that 2000 area where we kind of revisiting that, and we're looking for that bigger correction to start off the new year that went from 2022 into 2023 where we topped out. I'll show you that just to remind you what I'm talking about. This looks eerily the same that when you go back to that 2021 and we started topping out toward the end of the year right there, and we had this big correction coming into 2022 that lasted from the beginning of the year, went all the way into October, and then we finally got the Santa Claus rally coming out of that into 2023. So, Mr. Tucson, is this what we're looking at 2026? Do we get a big weekly style retracement off of that? Do we get a down here? That would be a weekly style retracement. That's pretty significant to 5,500, 5,400 from 69, 1,500 points. But this price action over here looks very similar. We had a correction, touched the weekly, went on a rampage higher into the end of the year in 2021, 2022 hit, and all of a sudden we started getting a bigger correction. Is that what's 2026 going to give us? We shall see. But that's why this price action over here looks eerily the same. And then all you see is lines, but we went in this many times. You can see it in the archive that we went over this, that it could be a duplicate of what happened. And if we get anything like it, that was about a 28% decline. Well, what if, Mr. Tucson and others, we get that decline now? So I'm going to move this to current price action. So let me stretch that out and get to where price is right now. And that would be roughly around this swing point right about there. And what if we get that 28% decline? Nope, don't want to put a, want to move this over here. Now I can grab it. What if we get that 28% decline? That would put us roughly about 49, which is a little bit below that weekly Magic Fibo, kind of like we did in 2022. Look at that. Interesting. Do we get a similar type of move? That's pretty substantial. 1,500 plus pips or so? Wow. Maybe even as much as 2,000 from 69 to 49? That's why I'm saying be careful. Now you drill in on the current price action. And again, this looks overlapping and looks corrective on that latest move. So I'm just zooming it in real big for you. And this is why this zone is very important. We did get the correction. We did reach the extensions. And typically you either come back to where you broke out to, which we're testing now. So it's possible this holds and we're ready to go breaking out for that last push. But if we don't start holding that, then it sets the tone for those few hundred points lower. Same thing with our NASDAQ, right? It looks less bullish. Kind of doing the same type of picture. This one looks less bullish. What did SPX do? We made a new high. From that recent high and pullback, we made a new high, reached the extension. Look at NQ for the cash index. We are at a lower high, Mr. Tucson. That's different. We have a series of lower highs. Rutro, is that as bullish as the S&P 500 right now? No. That's why I'm saying be careful with it. Lest we just burn and run right now and start breaking above that swing point, then it opens the door for some new swing point highs up there, sure. But this is looking more bearish than does the SPX or S&P 500 futures, ES, where NASDAQ futures, again, kind of double topped here. Cash index is at a lower high. And typically when you see the battle between the cash index and the futures, Cash index usually wins that battle. So is this that omen telling us that because we're at a lower high in the cash index and we basically just double topped on the futures, we might need that bigger correction? Is this the A and this the B and we need the C coming back down? Could be. So that's what I'm saying. Be very careful with this. I still think we're going to get a blow off top. I don't think this is the end and this is the market crash. Anything's possible, but I still think we're going to get one more push before it's done. But do we start the year off into 26 like 22 and then we get the last blow off top? But we've kind of been discussing that for quite some time. So all I can say is technical picture is the technical picture. We're a little overexhausted towards this grind. You can go to the software, you look at the software, and it's kind of saying the same thing. We're due for a correction. So I'm going to come back over here toward the markets. First thing we looked at was S&P. So we'll pull that up. And S&P on the daily, we're overbought. We kind of need a little depressurization. Last time we pulled back the slingshot higher. Do we do it again? I'm looking at the weekly. We're in overbought territory. The monthly, all these are kind of setting up similarly. The monthly, we're extremely overbought, been grinding higher. So you can see why my concern is once we get that blow off top, we're due for a pretty big correction. Is it going to be the Elizabeth, I'm coming to join you? Well, if it is going to be the Elizabeth, I'm coming to join you, then I would look for my monthly PAI and trend momentums to cycle all the way down. We haven't seen that since the last financial crisis. And on this platform doesn't go far enough back of data, but it was back in the 2007 financial crisis. That's when we got the Elizabeth, I'm coming to join you, honey. We had a full cycle down. This was corrective, and look, we just barely trend momentum's made it, partially this, but look at money flow right there. Did not get to oversold. So if it's Elizabeth, I'm coming to join you, hon, I'm expecting the red, blue, and green money flow to get oversold and the trend momentums to get oversold. And that would be a massive correction. Even if we just get another slingshot scenario, that was pretty big correction back in 2022, right? Got the monthly to hook, cross, steep slope, angle separation, ended up slingshotting back up, didn't make the full cycle, but that was a big move. I'm looking for another one. Last time we hooked and crossed again. Why is that important? Because when a monthly hooks and crosses, what are we talking about a hook? PAI hook, trend momentum cross, you get steep slope, you get angle separation. What does that equal? That equals a weekly cycle down. So you come over here and you draw a couple of these. There's a little weekly hook and a cross on that monthly. And then we have one over here. Do it again. We had another one over there. Hook and a cross. We got the PAI hook, trend momentum cross, steep slope, angle separation. And what do all those equal on a monthly? The lower time frame will cycle, highest of highest of highest probability. So what happened when that happened? From that swing point, this is weekly candles to monthly candle, but there's that swing point. We got a weekly cycle down, and what did we do the one before that? Got to turn my auto scroll off and go back. What happened there? Weekly cycle down, even slingshotted a couple of times, this one even lower, but we still got the weekly cycle down, weekly cycle down. How cool is that? So what am I keeping an eye for? If my monthly gives me another hook and a cross, then we know we're going to get multiple, somewhere in the neighborhood of 2 to 5 months minimum of a push lower. Is that what's in store for the new year? Monthly head as flat as can be right now. It hadn't hooked yet. But if we do get the hook and the cross, and we get a little slope, angle separation, then the probability we get a much bigger push and wait for price to push all the way down on that weekly time frame, Then we'll look to see where that is. And the technical picture is, even after this run, we need a nice pullback. Last time we had this big pullback, we went on the big run. We kind of came back into the area of the breakout. Well, what if we do the same? We got the big run. What if we come back into the area of the breakout? That's still a good 1,200 to 1,000 points plus on that. That's a big correction back down. Just to come back and visit where we broke out from after the recent correction going in April, the tariff talk, and the run since then. Amen? All righty. So let's continue. This is not looking as bullish as the SPX or EN, S&P 500. What about the Russell? Russell's looking like it's ready to turn over. Kind of reached the extension, went up to that 2,600 area, and this one 260 on IWM. But we talked about that 255 to 260 area. We're likely going to get reach and then get a pullback. Now, how much more can we pull back? Well, this is starting to set up like it wants to go lower. After we reach the extension toward the upside, this is the high probability reaching that extension up here. Now this looks like lower high, lower low. And this would say we need a new swing point low. Where are we going to go? Well, Mr. Tucson, that's where a 3.2 comes in very handy. We have a swing point high, we have a swing point low, and we have the lower high. So what's the potential target? It's 241. Well, so basically 242, 240. We don't hold that. Start pushing back toward the Magic Fibo. Right now is right 236 area, which is that extension / Magic Fibo. What if we don't hold from this recent low to the high? We don't hold the Magic Fibo, which is at 618, 786, this green box. What if we don't hold that in the Magic Fibo? Then it sets the tone. We need a new swing point low, which starts pushing us down to 224, 220. Amen? So be careful. The NASDAQ is looking weaker. The Russell's looking weaker. The S&P looks like it wants to grind one more time a little higher, but we'll see how that plays out. But that's why it's a cautionary tale at the moment. And even after the pullback, we're going to get one more push higher, possibly. Certainly, I do think SPX, ES, NASDAQ, maybe the Dow will get that last push. Still looking for the Dow before it's all over to get up near 50,000. We did reach the 48 range, but I still think we're going to get to 50 before it's done. But do we get the correction to go higher, or do we start breaking down much deeper like in 2022? So notice where the Magic Fibo is on the daily for those Dow traders. Right around that 45.9, 45.6 is this Magic Fibo. What if it visits the 3-day? Much further down, 43, 42. What about the weekly? What if we get the tariff talk weekly bounce? That would put us all the way down to 41,000, 40,000. If it turns out it's the Elizabeth, I'm coming to join you, honey, then we're looking more for the monthly type of pullback, which puts us around 30,000, 28,000. Wow. From 48 to 28, that's a lot of points, is it not? 20,000 points? So is that what's in store for Elizabeth, I'm coming to join you, honey? That's what I would expect if we truly get the financial crisis. Again, it could be stirred on by the commercial real estate bubble exploding. That could do it. Currency failure, some fiat currency failure. World War III could be a variety of things. All I could say is current price action is starting to look a little weak. That's kind of after this low liquidity grind. We're reaching. So all of these except ES, it looks less bullish. Dow most recently made a lower high, turning back over. NASDAQ lower high, turning back over. ES made a new high, slightly turning over at the moment, but is it going to give the last push? We shall see. But some critical levels to watch on the bigger scale for the Dow. that low up to the current swing point high, right around that 47.4 area is important. That's that 618,786 zone. So 46.8 roughly, this green box. Let me adjust that just a little bit with that price action. So as long as we hold that 47 down about 46.5, 46, yeah, about 46.5 or so, then this could be a pullback. We hold and we bounce. If we don't, then we're looking at coming down to 45, 44. So be careful. Could we turn into the 2022 where we get the first several months of a pullback? We visit the daily, that doesn't hold. We go hunting the 3-day, which again is down at 43, 42. Maybe we bounce off of that. Maybe we do like we did in 2022, where we come down here and do a monthly or a weekly bounce. And we go back in 2022, we can see what that looked like. We actually went up below the weekly before we were done. So we do something like that again, we're talking down at about 41, 40,000 or lower, 8,000 plus points. That's big, no matter how you slice it. Now let's throw in the Nikkei. That's what we look at, global liquidity. What's it doing? It's not doing a whole lot right now. It's just kind of go to the daily. It's just chopping in a zone. It's kind of making higher lows and lower highs. Call that a little seed squeeze type of deal. It's either going to pop up or it's going to pop down. What's it going to be? We're just kind of stuck right now. If we start to break out above this little resistance zone, then by all means, I think we'll go visit that 53, 54 area, maybe as high as 55. But if we don't, and this is starting to look a little bearish as well, like the Dow, like the NASDAQ, we're getting a series of lower highs so far. So if that happens, then what do? Likely going to break down toward the daily. So be careful. If we go popping, then by all means we go up here. If not, we go dropping and don't hold that support zone. Then likely we're going to come visit the dailies. Amen. What about the daily doesn't hold? Then look at the 3-day. It's way down here in 41.40, kind of like the Dow. And where's the weekly? Way down here at 38.37. And when the last time we visited that? Tariff talk, kind of like across the board. Any questions? So in closing on ES, this is the most bullish of the markets so far. Do we get the last push, or do we come tumbling down like the NASDAQ and the rest are showing more weakness? So be careful. We reach the extension like the pullback, but we still got to hold that support zone from the recent swing point low up to the high. There's your 618786 zone. That doesn't hold. Then we got extensions lower, making a new swing point. We don't hold that 6800 level, then the door's ajar to go lower down toward this 66 to 60, 67 to 66-ish area. And if we don't hold that, then it looks like we need a new swing point low. Amen? And that's off the weekly chart, but you can see on the daily, this is why this level's so important. That's the Tucson from the recent swing point low up to the high. You can see where the 618786 zone is, stretch that across. So if we don't hold 69 area and that 68 and change, roughly around that 6850 area, we hold, break below that, sets the tone, we go into 67. We don't hold that, then we got the Magic Fibo. So is this the end? And we get the correction before the bounce and then the blow off top? Or do we start holding and drift toward that 7,000 now? All other markets, NASDAQ looks like it wants to go lower. Dow looks like it wants to go lower. Nikkei looks like it wants to go lower. Is it possible they could do that and ES still goes a little bit higher? Anything's possible, but I'm still looking for the correction. Again, why? It's all in the software. Not only the technical picture, but like we were talking about, monthly's overbought, weekly's overbought. So let me do my time frames again. Monthly's overbought, weekly is in overbought territory. Turn your auto scroll back on, and we're extremely overbought. Daily, also in that same environment where we're overbought territory. So is this the beginning of that correction? Probably. I did look for the low liquidity grind higher. We pretty much got it. We have 2 more days, today and tomorrow, and then it's over. Start the new year. But is it truly setting back up what happened in 2022? We could have a correction coming into this that kind of sets what happened back in 2022. And that was that much bigger correction. Actually, let me go to, I guess I can do it off the monthly chart. Just scroll over that way a little bit. Go back to the monthly, and we could see what happened in that 2022 area, giving us that big pullback. It's quite possible. So be careful. This is telling us we need some sort of correction. And this looks similar. We got a pullback, a big run, then it happened. On this, we got a pullback, a big run, and then it happens. Amen. That's why I'm a little leery about maybe we get that blow off top, but a correction is definitely coming. No ifs, no buts, no ands. Monthly overbought, weekly overbought, daily overbought. It's a matter of time. Not if, but when. And the only question is when the when happens, Harold, is it going to be a monthly cycle down? Or is it going to be a daily cycle, a weekly cycle? Who's going to cycle down? Well, that's the beauty of the software. You get a monthly hooking across the weekly cycles. You get a weekly hooking across the daily cycles. You get a daily hooking across the 4-hour cycles. You get a 4-hour hooking across the 1-hour cycles. Follows the trend. All righty, let's continue. What about the black gold Texas tea, the Beverly Hillbillies? Let me move down and get my little scroll bar here. Well, let's throw in Tesla before we get out of that. Tesla, I do think we're going to get a bigger correction on Tesla after the run. We got a run to the extensions, get a little bit of a pullback. So from the recent low up to the high, we got this 420, 427 area down about 400 area. So this is an area I'm watching on Tesla. I'd like to see this 618-786 zone hold. So I do think we're probably going to get a little bit deeper correction before the next blow off top. And as you scroll back further, we got earnings going in the next year. You can see there roughly January 26th, Wednesday 28th, January 28th, sorry, earnings revenue in 2026. So is that when we start looking for the next push? Get the correction, bounce, and go blowing off higher. I still think Tesla is going to go higher before we're done. And I'm just looking for this correction to come in and then a big push higher into 2026. But we'll see how that plays out. Maybe it ties into you get the correction during this and then you on a run post earnings. And then we do the same thing, get a correction in the earnings and then get a big run post earnings. Amen. And I still have my TSLL, even though it is pulling back accordingly. Underlying pulls back, the leveraged ETF is going to pull back, but I still think we're going higher before this is done. All roads lead to Tesla pushing up to that 657, maybe 8, 9. If it goes to extreme, this thing could skyrocket into the 50s, 60s. We shall see. But I do own lots of shares. I can't tell you what to do. No buy, sell, to hold recommendation. It's not my job. But I do own TSLL shares. And we started when it was in the $6 range. I kept telling you, man, there's an opportunity. You need to be buying some. Boom. Is it going to go higher? Still think if it's a shoo or a dud, we're going up into the upper 20s to lower 30s. And if it turns out Tesla go ripping 7, 8, gets to 700 or higher, then we're going to get past this little resistance zone over here and open the door to the extensions up higher. What does that look like? Swing point high to swing point low. That's my 618786 zone. I definitely think TSLL is going to get there. But if Tesla goes ripping 700 and higher, then the door is ajar to break this zone and start opening the door to 46, maybe 50 area, kind of that bubble up here. Okay? All right. Let's continue. What about, we'll do gold and silver after. I'll go ahead and do black gold Texas T first. Still be careful with this. I'm still thinking we're going to get another break lower. I don't think this is the end of that push. Still looking to go down to 50 and lower is the plan. And could this thing drag on and push us into obviously 2026? Well, the answer now is yes. We only have 2 more days. Is it possible oil could dip down to 50 and lower in the next day and a half? It's so theoretically it's possible, but extremely unlikely it's going to happen unless we get some missiles flying in the Middle East, something of that nature. But I'm looking for this thing to go lower first before then we get a massive breakout to the upside. Got it? So in closing, been saying it for months. This goes back way, looking at this big downtrend, kind of compress this price action. How this looks like the bigger A, B, C. And when we finally finish that, we get a big push. And the big push could be we make a 618 retracement out of that. So if we can get down to 50 and lower and we get a 618 retracement, that's like a double. Wow. But the last time we got into the mid 50s, what happened? Rockets went off in the Middle East, and that thing went from the mid 50s up to the upper 70s, almost 80, $78. So I'm looking for more of the same. So what's our strategy based on the plummet of black gold Texas T? We want to look into investing into UCO, which is a leveraged product. And UCO should go ripping higher once we get the push lower. So I'm looking to load up on some shares of UCO when this price drops into the 16, 15 or lower. Looking to get in the teens where you say, well, Gary, 19 is a teen, right? It's at the upper end of the teen. But I still think if oil prices flush to 50, and that's the plan, 50 and lower, this is flush down here into the mid-teens, if not a far-reaching low 11, 12 area, just outside the reach of the low teens. Got it? So all I can say is I have some good till cancel orders down here, and it says if it reaches 15, I won't buy something. It reaches 14, I won't buy some more. 13, 12, the lower it goes, the more I want to load up. Because when oil prices hit 50 and lower, it's not going to stay there long, and you're going to get a violent reaction back up, whether it's missiles flying in the Middle East to get the oil prices up. But what do we know about oil prices in the 50s and lower? Drill, baby, drill can't survive there. It needs to be in the 60s for them to be able to drill, baby, drill, and higher. So the sweet spot for crude is somewhere above the 60s and below the 90s. Why below the 90s? Because the 90s start to represent inflationary pressure where all goods and services start getting very, very expensive. So that's kind of the sweet spot for crude to sit somewhere in the 60s and below the 90s. And that's where I'm looking for. Once we get in the 50s down here and lower, then I expect this to go, ripping back into the 60s to say the least, which puts us way up in this area. And likely we're even going to get that push, maybe even toward that bigger 618 retracement, which puts us, like I showed you here, that bigger move. This would put UCO pushing us potentially, and this is a declining asset, so this is not something I buy UCO and hold it for life, like Nvidia and Microsoft and some of these companies. You don't buy and hold that forever. You simply just invest in the short-term moves of this, but this is based on crude, right? So this is what we're looking for, big picture. Do we get a 618 retracement from recent high down to the low? Do we get that? I still think when we get to the 50s and lower, I'm going to buy UCO, because when then crude goes ripping higher into the 60s, 70s, 80s, maybe test up near that 100, that UCO leverage product ought to go skyrocketing higher. Amen? All righty. So there's the plan. For the short term, SCO is the inverse of that move. So when crude, and I'll stretch that out for you and get this 1 second while I stretch that out, bring this up to current price action. And let me zoom that in. Here we go. So we talked about buying some shares of this because as oil prices decline, this SCO inverse, ultra shares right there, ultra short, it goes the inverse. So when oil prices go down, this baby goes higher. And we bought some shares down here, had a nice little pop, and now we're getting correction. So if oil prices continue to drop, what's this going to do? Go popping into the mid 20s, right? So I still think there's more upside to be had on this before it's finally over, as I expect oil is going to dip further. So if you do own any SCO shares, be sure you liquidate those as oil prices start to hit 50 and lower. Then this should pop a little higher, but you start liquidating that. And once oil is 50 and lower, I shift to buying some UCO. So in closing on Black Gold, Texas Tea, the Beverly Hillbillies, all roads lead to lower highs, lower lows in the shorter term. Could this drag on into 2026? The answer is now, since it's only a day and a half left. Right, Harold? The likelihood we go into 2026 before it happens is a resounding yes, but this could drag on a little bit longer. But be careful. Once we get a big sell-off into the 50s, and we're in the 50s now, obviously, but into the low 50s, 50 and lower is kind of what I'm thinking. We get down to this bubble, so I'm going to need to move not that line, I want to move this bubble. If I can get that bubble to move, I'm moving everything but the bubble. All right, I'll do it this way. I'll stretch it out this way to give it some more room and bring it more over here. So I still think we're going to get that bubble to navigate lower as far as price. So I'm looking for a price to get into the low 50s / 50 and lower. And once it's there, what do? If we have any SCO, sell it. If we don't, then buy some UCO once oil prices reach 50 and lower. All righty, let's continue from Black Gold, Texas Tea to yellow gold. What happened the other day? Needed a correction. We kind of retested this zone where we broke out from. If this can hold and we start breaking back up, then that 45 is in cards. And you go a little bit higher, and we even have another target. I have to go out to like a 3-day to show it to you. Up there about 46. But this is also the zone you want to be careful in. Why? Monthly overbought, weekly overbought, daily overbought. So we're kind of in the same boat in a lot of these markets. They've been on a tear. Do I think gold's going to go higher still? Yes, but I think we do and certainly overdue for a correction. This is what we call an expanded flat correction. If this holds and this is the A and this is the B, then we need to come back into the area of wave A. And I'll go back to the daily, and that would put us more around that daily Magic Fibo over here. If this is the A and this is the B expanded flat, then you come back into the area of wave A, which would somewhere be in that 4,000, 3,800 range. Maybe we come visit the Magic Fibo. Amen? So either we're retesting the breakout. What happens after you reach your extensions, Mr. Tucson? You pull back to retest the breakout zone. If that doesn't hold, then the door is ajar to go to the Magic Fibo. Kind of a general rule of thumb. Highs to lows, you break the 618, you go up to 786, 618, 786 zone. You break out, you go up here 1448, 1272, push toward the 1618. But once you start reaching these extensions, what typically happens? You get a correction back to where we broke out from. If that doesn't hold, then the door is ajar to come down, and that would look like the A, the B, and the C, and we come visiting the daily Magic Fibo. So I'd be very cautious short term of gold giving us that bigger correction I've been looking for. Amen? All righty. Same thing with silver. It could actually still go higher while gold takes a big of a break, but typically they go in the same direction. And this one too is on a tear. Boy, were we correct years ago when we talked about this during COVID, and it was down in the single digits, 11-ish dollars. I was like, man, silver at this price is an unbelievable deal. And then we got the big rip, then we got a pullback. And ever since then, going into 2024, we were targeting 35, 40 area, and we went well beyond that. This is the futures, but it was SLV, for example. We talked about this in great detail, that we were looking for that push going into 24, going into 25, and now we're heading into 26. We got this massive run. Is it over? Can it go higher? Yeah, I think it still can go higher, but we do need that correction. Fair enough. And what I was referencing was on this platform, black gold, this one right here, we got that massive run, and there's the daily, but let's go and look at the higher time frame. Expert advisor, time frames, that's what I'm looking for. Monthly. Look at that run. Parabolic, to say the least. And silver does not historically make a parabolic run without a correction. Got it? So is this the beginning of the end, Mr. Tucson? That we get the bigger correction, then we look to buy the dip and continuation higher. But remember years ago when we talked about silver and it was down here, I was like, silver's going to break out to 50 and higher. We haven't seen it in quite some time, and we were expecting it to happen, but it took longer than maybe some would have expected. But as you can see, and I clicked on the wrong one, go back to my silver chart. That is quite the run. Be careful. Dip, then rip. This thing certainly can go parabolic for longer than we could stay solvent if you're betting against this thinking, yeah, it definitely has to correct. Well, this thing could continue, but we had discussed that in great detail that this thing was going to go breaking new highs, and we expected it to happen toward 24. We reached our 35 target, and then we went into 25. We said likely by 25, 26. We definitely were going to be at all-time highs. Sure enough, bingo. Now what? Cautionary tale, monthly, weekly, daily, extreme overbought, that parabolic move. It's time for that bigger correction. Amen? All righty. So rinse and repeat. You don't go up forever. You do need a correction, and this may be the beginning of that. So as I zoom in, could we go higher? Yeah. What's the next target? 73 up here. That's the next one up for SLV. So is this going to hold at high to low? We hold the 618, get another push lower. So here's some levels to watch. If you're specifically looking for some day trading or potentially short-term trading, we have from the recent push up high to the recent low. This is an area we're testing right now at 68.50 to 69.70 area, 618.786 zone. So if this area fails right there, if that area fails, then be careful. That could mean another push lower. So I'm going to change that to resistance. Make that a light pink. So is this the high, the low, the lower high, the lower low? What if that's the beginning and this little zone here, Harold, is going to hold? And we start breaking down. Then you can use your 3-point tool so you can stretch that out. I'll bring this in and zoom it in so you can see it a little bit easier. Again, my desktop is in the shop, trying to work on this from my laptop. So it's much bigger difference than my massive, huge screen versus a little laptop. So it's an adjustment, but I appreciate you being patient. Still giving you quality education for an unbelievably priced. And we'll use the 3-point tool. So if this is the beginning of a bigger correction, you got that high, you got this low, you got this lower high. That would put us down into the 60s, maybe upper 50s. Nice little move. So watch this resistance zone. Do we hold below that 69 and chain? I guess that's a little bit high for that. More like that. So from the recent high to low, 618786 zone, if that holds, look for a push lower. And if we start breaking below, then we can start looking for the 60s, maybe upper 50s. And then, of course, Arrow, you can continue to rinse and repeat this. So, Gary, what's my support zone? If this holds and we break down below what? Use another 2.2. This is why there's lines upon line from that low to the recent high. If we don't start holding that 66 down to about 65, so we can put a support zone, kind of stuck between support and resistance. We got our 66 to 65 zone right there. So if we don't start holding that to the support side, then we're going to break down and make a new swing point low. So go to settings on this, change this to light green. So what have we done? We're resistance and support. We don't hold 65, then we're likely going down at 63 first, then down to 60. It kind of all ties in beautifully together. Or if we start closing above that 69, say 60, say 70, we start closing back above 70, then we can start targeting 72.30, 73.20. So do we get a breakout continuation or do we get a bigger correction down? I'm leaning more toward a correction down, but it is what it is. If this holds and we start breaking back below the support zone, then look for a new swing point low, targeting in the low 60/60 area. Amen? All righty. Let's continue. What about crypto? Bitcoin? Oh, we're going to finally break out. This looks like some consolidation zone. Is this the consolidation for the next big breakout? Or is this the beginning of another lower high, lower low? But over the last several days, we've been reaching this zone up here around that 90,000, 90,500, 91,000 area. Every time Bitcoin runs up there, there's been a lot of selling back down. It rallies back up there, sells back down, rallies up, sells back down. And we got a pretty big support zone down here around that 85 area, 85, 84, but roughly around that 85. So how have we been stuck? It's absolutely stuck. What does that mean? We need one more flush to really get people frustrated before it goes ripping higher, or do we finally start breaking above? The big picture is we need to get above 108 before we start going all-time highs again. Why is that? From a recent high, all-time high down to the low, that's my 618 zone. So we got to get an A above the Magic Fibo. That starts to get more bullish. And then B, we start closing above the 108 and change area. Then that sets the tone. We're going breaking all-time highs again. And in the interim, we're just consolidating. So we shall see how that plays out. Amen. What we don't want to see is a break below the recent swing point lows. We do not want to see a break below 80. I think if we start breaking below 80, that sets the door for us to go down to about 74 zone, which is that prior swing point over here. So we break 80, which is that swing point, we're likely going to go test this support zone. And that kind of sets the tone that maybe Bitcoin topped out. But if we hold this and we can start ripping higher and holding it, and we do get above 108, then it's extremely high probability we're going onward and upward to all-time highs and even potentially reach our original target from 2022 bottom when Bitcoin was below 20,000. I made huge statements going, you're going to not like it if you don't take advantage of Bitcoin below 20,000. It's going to run into the 100+ thousand, and we were targeting about 150. Well, we got to 126 and change. So is that the end? And is the beginning of that, or is that kind of correction we did back in the last halving where Bitcoin made this run, had a big correction of over 54% and still went on to all-time highs? Is that what's a brewing now? Or is this the end and we're going into crypto winter? Either way, it's been quite the run. Hopefully you took advantage of it. And I'm not trying to tell you it's over, but do we get all-time highs? You know what to look for. We got to get above 108, then I'm extremely bullish for all-time highs again. In the interim, we start breaking below 80, expect we're going to go to 74. And then even if it is doom and gloom and we're going into crypto winter, I'm still looking for a corrective move higher before then giving us the next push down into late 2026, maybe 2027, before we look for the next bottom reversal. Why is that? Bitcoin does a halving every 4 years. The next halving is in 2028. So I've got to go out to the weekly chart, and we can see in 2028, we have the next halving out here, and we're going to look for that halving to take place when we get a big pullback in the crypto winter, kind of like we did in 2022, and then we go 12 to 18 month run, still rinse and repeat. It's happened every other time. First halving, 12 to 18 month run, looks like a little dead zone here. If that's your EKG, you're like, am I alive? But you zoom in here, it's quite the run. 12 to 18 months, we got to pull back into crypto winter low. Next halving, 12 to 18 month run, and a big crypto winter low. Next halving, 12 to 18 month run, crypto winter low, 12 to 18 month run. So rinse and repeat. So be careful. We break 80, we're going to 74. Even with this is crypto winter saying, yes, it's happening, still look for a nice run to a lower high, to a lower low before it's over. But if this is in 2026, 27, Bitcoin gets to, write these numbers down, 50,000 to 30,000 is the zone. That could change depending if we do go ripping higher before we're done, then we come back down, or is that the end? I'm thinking 50 to 30,000 range. So all I can say is if that's the end and we don't go breaking all-time highs again and we do get further pullback, when Bitcoin hits 50,000 or lower, treat it like we did in 2022, Ian, when we're at below 20,000. I did make a statement back then that I said, I don't think we're ever going to see Bitcoin at 25,000 or lower. We'll see how that plays out. But even my zone here from 50 to 30 is still above 25,000. Got it? And then what? Having in 2028. So we buy low, sell high, buy low, sell high. When's the next time we're going to sell? In 2029, like late 2029, maybe 2030. When do we buy? Late 2026, maybe early 27. But anytime Bitcoin hits 50,000 or lower, I'm a buyer. And then when it starts pushing into the hundreds of thousands this next cycle, which is going to be up off the chart up here, we'll be able to figure that out, just kind of like we did on this pullback, gave you potential targets. And now we're looking for the next ones for the coming years. All I can say is, no, I haven't given up. I don't say that this is a done deal, but I don't like this weak price action at the moment. I was expecting Bitcoin to have a big sell-off. It did it. I thought we'd go well below 100,000 and get people really nervous, but I don't like this latest price action just kind of grinding. It looks like accumulation, part of an accumulation style, and we're going to get a pop. But is the pop the kind that breaks into all-time highs like we did over here? I showed you back in the last halving when we did a 50+% decline over here, way off the chart, when they thought, oh, it's crypto winter, it's doom and gloom. And what happened when everybody gave up? Ripped to all-time highs. Before then, we got the official crypto winter low. So this type of behavior could still be on the table, but what needs to transpire? Got to get above the Magic Fibo on the daily. That's step one. Step two is to clear that 108 hurdle. Then it's clear sailing to all-time highs. And this original target, 150 to 175, could still be on the table, but Bitcoin's got to thread the needle, get above the Magic Fibo. That's a start. Get above 108. Then we start looking at 132, 138, 154. Amen? To the downside, we break and close below 80. Houston, we got a problem. We're going down to 74. Do we need that last flush to really drive people insane? To say that I'm selling everything, I'm getting out, I'm going short Bitcoin, and then it rips? Because again, this pullback off of that recent high to the low so far is not as big as the one from the last halving over here. And people thought it was a done deal and it was over, but it still ended up giving us all-time highs. Got it? So like this, we had to thread the needle, and we finally did, got above the Magic Fibo, tested it, and then skyrocketed to new highs. We're kind of in the same boat, and I didn't mean to move that. I always grab the wrong thing when I'm doing this on this bigger picture. But Mr. Tucson, is that what's happening now? This is not nearly as big as that prior correction then. So could we go a little bit more and still do it? I like to see 80 hold. Amen? We break 80, we go on to 74. We hold, we break above the Magic Fibo, and we clear the hurdle of this 108. All roads lead to the upper 130s and potentially up toward that 150, which we originally talked about. Amen? Any questions? Ethereum still got some nervous price action as well. You know, zoom in. I'm not liking what I'm seeing, but it doesn't mean it's all doom and gloom. We just have to hold these prior swing point lows. Amen. So for this one, that 2600 area, absolutely must hold. We break it, we're going down to 25, 24, maybe even down closer to 2,000, which is not very inviting for the upside potential. And again, when do we get warm and fuzzy on, hey, Ethereum still got some more upside? Got to get above A, the Magic Fibo, that's a start. Then for this one, from the high to the low, we got to get above that 4,000 area. We get above that, then it's game on to all-time highs again. Any questions? So just like Bitcoin, Ethereum's kind of threading the needle. Do we get it? Well, we can do the same kind of thing. We go back in the last halving, and what happened? Back in the last one, we got this big correction down, and when everybody thought it's doom and gloom, it's going to zero, it ripped to all-time highs. Got it? So even with that bigger correction, and you can see what type of correction, use this little price, date, and price range, and you go from the recent high down to the low, about 60% decline. Wow, that's pretty big retracement there. And it still did, when people thought it was doom and gloom, it's going to zero, it went what? All-time highs, like Bitcoin did. So is that just a replica of what's happening here? And notice, I'm going to take this big one off of here, but just so we can see what that looks like, remove this. So how much of a decline did we get? We didn't get that 60% from that high to this low. We only got about 40-ish decline. So could we still go breaking out to all-time highs? Yeah, but we got to thread that needle. And if you kind of look at it, right, Ian? You kind of come back over here and you look at that same scenario. We kind of did a big drop. We're trying to thread the needle. We kind of chopped in this zone, and then we ripped. Kind of what we're doing now. We kind of got the pullback, and we're kind of chopping in the zone. Do we finally go ripping and breaking out? I'm still holding some shares of my ETHU, and I bought a little ETHA, expecting some more upside. So yes, I do think we're going to get a pop either way. But first thing before we get warm and fuzzy, above the Magic Fibo, Harold, then above 4,000 sets the tone to new highs. Amen? Pretty straightforward. In the interim, we don't want to see a break below that 2,600. We want to see that baby hold, and we don't want to see any new lows. But this kind of looks like it did back several years ago, and when everybody thought it was over, it still did one last blast. So could that get us to the 6,000 or so? Potentially. And what really excites me, but I don't like the price action since then, Harold, is this right here. You know what's coming, my combo meal. From the recent low up to the high, we have a 618 retracement out of this, and a Magic Fibo bounce in a combo. And typically when you see this play out, when it does not a guarantee it's going to, but when it does, from the low to the high, you get a 618 and a Magic Fibo. In this case, it's a weekly. We came down Magic Fibo, we bounced, we're holding that zone. So if we go breaking out, typically when you get the combo, what is that? A 618 retracement combined with a Magic Fibo bounce, combo meal, it typically wants to push toward a 1618, which is up here at 8,000. Now most people would say that is impossible. But first things first, got to get above the daily Magic Fibo, then we have to clear the 4,000 range to open the door to new highs. And if this plays out with the combo meal, wouldn't be surprised it could push up toward 8,000. All I can say is what happens if it does? That ETHU is going to go soaring, and anything else, ETHA, et cetera, the underlying, if Ethereum does it, then those ETFs, leveraged or not, are going to go ripping higher as well. Amen? All righty. So with that, I'd like to say I'm humbled and honored to be your mentor and instructor. Let's circle the wagons. Again, crypto. We know the levels to watch. We know if it gets above the Magic Fibo on a daily, we get warm and fuzzy. We know if it breaks the 618s, which for Bitcoin, that's above 108,000, then we get bullish to new all-time highs. If Ethereum does it, we break above the Magic Fibo, then we're able to break 4,000 range. Then we get warm and fuzzy for Ethereum to go breaking toward that 6,000 plus, and maybe even pushing toward the 8,000. That would be a big push. Love to see it. Continue to circle the wagon. What about our markets? Be extremely careful because, again, the cash index and the futures are not lining up exact. And I'll show you what I'm talking about. I'm going to go back to the daily and bring price action in here. And what we have on the cash index on SPX, we did break highs just like ES. So S&P 500 is more bullish because in both cases, the recent pullback, we broke and went to the extension on both the cash index and the futures, right? Those are in alignment. But when you look at NASDAQ, Houston, we got a problem. The futures basically did a double top where the cash index is at a lower high. Rut-row, we have a problem, and this is not looking as bullish. So when the NASDAQ isn't looking as bullish, the Russell isn't looking as bullish, it wants to break down. So Harrow, I don't know if you saw that earlier, but I'm expecting IWM start pushing toward that 240, 240, say 242, 240. That doesn't hold, then maybe a visit of the Magic Fibo. But that's kind of the plan. This high, low, lower, high sets the tone. We're coming down here. And I would not be surprised to see us come down toward the Magic Fibo. Fair enough? So the markets are looking a little top heavy. The monthly, weekly, dailies on the software is overbought. We need a pullback. Only one looks still a little bit bullish. I showed you this at the beginning of class. You go to a 15-minute, and this potentially, if we hold that prior swing point, looks like a 5-wave move. Bring this back over here. This looks like potentially a 1, 2, 3, 4, and then we can get the last push maybe towards 7,000. But we have to hold that prior swing point. So we drilled down on these and we said as long as 6,800 holds, we still have the potential to go up towards 7. But if we break 6,800, which is the Magic Fibo area here, excuse me, this support zone, then it opens the door for 100 points, 150 points lower, and we look for a new swing point low. So basically what he's saying, from the low to the high, and I can move this to be exact on a small scale, but from the low to the high, you can see where that 618786 zone is, down in the support zone. So if we break below 6,800, what does that mean? We're going to make a new swing point low. Got it? Or if we go breaking above the swing point high, the next target's up here at 7,000, 7,010. Are we going to get it? ES looks like it potentially could play out, but the rest do not. NASDAQ, again, difference in the scenario. We're at lower highs, not higher highs, and this does not look nearly as bullish. So I'll just go out to my daily views so you can see it much easier. This is clearly more bearish than bullish at the moment. I don't know if the NASDAQ has enough in it to go breaking out just yet. So when we double top here and then the cash index is at a lower high, that makes me want to believe we need to roll over and come visit the Magic Fibo. So I'm very cautiously going into 2026 We may revisit what happened in 2021 going into 2022. That's what we showed you here. Go out to a weekly, bring this, remember SPX, what happened in 2021 is we topped out. We then got a big correction going into the new year of 2022. Is this what we're about to do into 2026? I would not be surprised. What do we have in common? Monthly overbought, weekly overbought, daily overbought, got that big push. We got a monthly hook and a cross. We got the big weekly cycle down. Actually went visiting the weekly Magic Fibo on that pullback. Is that what we're in the mood for going into 2026? Maybe. Amen. Or if we get even a bigger one, that's the Elizabeth, I'm coming to join you, honey. But that was a weekly cycle down with a little slingshot a little bit lower. But we didn't quite get a monthly cycle down. If we get Elizabeth, I'm coming to join you, and the big financial crisis hits, again, could be the commercial real estate bubble burst, could be a fiat currency, a World War III, don't know exactly what. But if it's Elizabeth, I'm coming to join you, then we're looking for a monthly visit of the Magic Fibo, which is much lower. Amen? All righty. So again, the markets, ES looks more bullish than the others, but NASDAQ does not. Russell does not. The Dow doesn't look very bullish as well. It looks like it needs more of a correction. So I'm going to do the same type of thing with the Dow. For those of you that like to trade the Dow, what is the problem here? Same thing. High, low, lower, high. This is setting up with a 3.2 arrow. We're probably going to come test this zone. We don't hold that, then the Magic Fibo is in the picture. So what does that 3.2 look like? On the Dow, you got the high, you got the low, you got the lower high. That would set us right around that 618,786 zone on this bigger picture. And if we don't hold that, game over. I think we're going down to the Magic Fibo. Okay? But this looks more bearish. We're getting lower highs. ES, we got higher high. Other ones, lower high. Danger, danger. So when you look at NASDAQ, you look at the Russell, and you look at the Dow, and they're all looking similar, then is ES going to be the one that rallies while the rest of these pull back? Typically, they go in the same direction. So that's why I'm saying be very careful. Amen? All righty. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Remember, I want to wish everyone a health, wealth, and prosperity and abundance into the new year. I hope you and your families have a wonderful new year and take the time to celebrate. But we shall return on January. Let me get those dates. Let me pull up my calendar. That'll be Tuesday, January 6th, Wednesday, January 7th, and Thursday, January the 8th. Normal schedule. And hopefully by then, my desktop computer will be back and I'll be in full swing. But we got the information I wanted to give, and there you have it. So take care. God bless you. Have a great new year. We'll see you next year. That's it. That's all.